Welcome to TheoTrade. This is Don Kaufman. Here we are. It's June 15th, 2016. You are watching the Theo Night video. First, let's start with the fact that today there was an FOMC announcement followed by the infamous Janet Yellen conference. What ultimately occurred? Well, the groundhog came out, saw her shadow. 6 more weeks of winter. What does that mean? By the way, in no way were any groundhogs injured in the making of this video, and I'm not comparing Janet Yellen to a groundhog, but you have to see the similarity there because the next FOMC meeting is not until late July. It's exactly 6 weeks away, and what I'm saying is they didn't do anything. There was no change to the FOMC policy. They kept rates the same. They kept actually their tone the same as well, which kind of surprised me. How did markets take it? Well, let's zoom in here because we got the S&P futures, and I'm going to do a lot more than just talk about the FOMC here. There's some really specific details, some trade ideas I'm going to run through. First and foremost, the S&Ps throughout the course of the day were up, and they actually remained up throughout the course of the day. Right here at 11 a.m., and that's 11 a.m. Pacific, out comes the FOMC announcement. Futures rally higher. Just dip a little bit off of it, end up doing absolutely nothing, and then it all comes down here to, well, listen, we only have 6 minutes left in the trading day, and in the last half an hour of the trading day, somebody decided to sell, which has created an incredibly good opportunity, which I'm actually going to show you here in a minute. Today has been an intraday traders kind of paradise over here, and I've been in and out of the chat room throughout the course of the day talking about some of the trades that I've been doing. I'm actually going to show you a few of the trades, but again, S&P selling off right now. They're down about 5. Nasdaq getting smoked a bit, down here just almost 0.5%. So the selling resumes, and the product I'm really been watching happens to be the XLF, the financials, which in some recent trade, they've been pummeled. They're ending the day, it looks like, right about massively unchanged over here. But again, to bring a little bit perspective into the financials, there's some damage done over here, and we're hitting some key thresholds, right? So you got to look at 2250. Look for it tomorrow. This is a trade opportunity. It's not often that I jump on the bandwagon of an underlying that's already getting beaten up, but in this case, no, it's an entire sector. It's an ETF product. And here we are seeing, again, the XLF get pummeled day in and day out. Breaking under 2250, there could be some considerable downside to it. And we may look for a trade opportunity inside of the next day or two to go after a little bit more downside activity that could persist inside of the XLF. But before I really go any further there, again, the XLF, one of the key sectors over here, bonds all over the place today, end up about 0.5 point over here. However, an area that's still catching my attention happens to be the volatility futures, which as of late, again, the move in volatility has been nothing less than phenomenal. But take a look here on an intraday basis. It's just a Wednesday, okay? So Janet Yellen comes out, does her thing, the volatility drops off. Just kidding, rallies back up, fades, and then explodes. Okay, so volatility is picking up coming into the close over there. How unusual is that? Very much so after the FOMC conference, after the FOMC, announcement over there, to see volatility pick up. More importantly, though, it's not just about looking at one volatility contract. It's looking at the volatility right now in the 35-day is about 20.4. And 63 days out is just about the same, about 20.6. So the volatility in the present is every bit as large as the future. What that's saying is risks now are still going to persist. And here you'd probably have to think a little bit about, again, the British exit vote that's coming next week. Nevertheless, that could also impact the financials. I am of the belief markets, they're already anticipating what's going to happen, with the British exit vote. And most often in a move like this, markets may not wait for the British exit vote. That is, they can anticipate. If they see risk coming, believe me, risk is going to be priced in over here. S&Ps could have a wild couple of days coming into it. Next week, I'm already getting you ready for it. It's going to be all hands on deck next week. I mean, you got the British exit vote followed by the Russell rebalancing, which is always the heaviest volume trading day, okay, in terms of stocks of the year. The heaviest day of stocks in the year is the Russell rebalancing. Yeah, that happens to be the same day. It's like the day after the British exit vote, so put your helmet on because things are going to get a lot more exciting. So volatility is still highly elevated at this point and rallying again into the close after the meeting comes out. Now, a few things I wanted to talk about because I've had a lot of emails and a lot of questions. Some of you guys, you're tuned in, turned on all day in the chat room, and you probably already know this. We exited a number of our positions both yesterday and today and exited those positions profitably. Number one, we had a position on Microsoft. Okay, we actually had a bearish spread on Microsoft. That spread has been exited for over a 60% profit. So we're out of the contest. All right, next down the list over here, Facebook. Happen to also have a bearish position inside of Facebook. That was a position that I carried forward for some time. What do we do with that? Exited profitably. Out. 55% gain on that. Next on my list over here, this is one that I've absolutely mentioned on these evening videos over here, Wells Fargo. What do we got in Wells Fargo? Well, we had a spread. We exited it profitably. Okay. We needed Wells down below 47. It did that and then some. Again, that's a 57% profitability. So we're out of it. So those three spreads have been closed. What am I monitoring right now? Some of the positions I've still got on. I've got a position in Amazon. It's up about 20% right now. Nothing too staggering. It is up 20%. Again, we're looking for that key threshold of about a 55% gain. Got a trade in NVIDIA. That one's going in my face, but I like where we're at. Why? Because in NVIDIA, we've got plenty of time, okay, for the underlying ultimately to turn around. In addition to it, throughout the course of today's trading session, I didn't do anything big, and sometimes I like to back away. You know, for those of you that do trade on an intraday basis, okay, we do this in the chat room throughout the course of the trading day. These are some of the trades that I posted in here, and I'll start from the beginning. But I went out this morning. Again, I'll kind of enunciate as we come into the close of the trade today. But here this morning I went out and sold a bond. What did we sell the bond for? 169 and 15 ticks. So I sold the bond, turned around intraday, bought the bond back for what? 169 and 10 ticks. Now each tick is worth $31.25. Do the math. It's like 31 times 5. Not half bad for an intraday scalp. Okay. Next on my list over here, I decided to dig into oil a little bit. I didn't do a huge number of trades. These are like one contract trades. No big size over here. Make a couple of $100 over in the bonds. I cruised over to oil. Oil, I was on the wrong side of it. I went out there and I actually sold the contract for $48.22. I bought it back $48.20. I made 2 cents. I had to get out of it, though. I had to get out of it because the FOMC announcement was right around the corner, and I got guts, but there's no glory in stepping in front of like Janet Yellen, so I did bail out prior to that. Made 2 cents, at least cover the cost of my commissions. And one of the biggest and probably the most effective thing you can do, this was a Wednesday. The FOMC announcement comes out on a Wednesday. There is an expiration, okay, every Wednesday now specific to the SPX. So I went out there on a little bit of a flyer. This is like a risk 1 to be able to make 2 or risk 1 to be able to make 3 kind of trade. It can only be done on a Wednesday or a Friday. I went out there and I purchased the 2080 puts. I bought them for $2.30. I only did one contract. You don't need to go big, right? I was able to whack out of them just a short time thereafter for $6.90. So again, it's about picking up nickels and dimes in front of a bulldozer over there and making sure you get out of the way of the bulldozer as you trade. Again, not having any huge or substantiated risk. 6 intraday trades over here. Never traded more than 1 contract. My total exposure, the SPX is like the granddaddy of all the products. I had $230 at risk. So we made, $690 out of it. Net, you make like $400 or $500 in a day. Okay. This is what you want to do. Again, kind of pick up nickels and dimes in front of a bulldozer, something I've been doing more and more of in the trading room throughout the course of the day. Speaking of the trading room, we've actually got a class coming up, and we invite each and every one of you to it. If you, of course, are a member here at TheoTrade, you're going to the class, because if you have a membership, you go to every single class. The class is coming up. It's this Saturday. It's Guide to Selling High Probability Spreads class. I have been day in and day out killing myself on actually putting together this PowerPoint for the class. I've actually been working on it for the better part of 3 weeks. If you have interest in it, TheoTrade.com/trade. The class is $297. Okay, that's it. Okay, I'm going to tell you one thing. It's going to be worth every dime of $300. It's worth every dime of $1,000. Or you could just sign up for the 12-month membership here at TheoTrade. What does a 12-month membership do? Well, it's quite simple. It gives you everything. That is, it's every class that we have done. Okay, that includes Options 101, Options 201, the Covered Calls class, the In-Out Spreads class. Okay, high probability spreads class, that's the one that we're actually doing this Saturday. The Iron Condors class, my selling premium and minimizing, risk class, survive and thrive in extreme volatility class, a weekly options course. They're all in there. So if you sign up for the 12 months for TheoTrade, we give you every single class that we have done, and we will give you every class that we've done and going to do for the next 12 months. Here's some of the classes that we're going to be doing inside of the next 12 months. Selling cash secured puts, futures trading, hedging and beyond, calendar spreads, pairs trading, intraday trading, technical analysis. I'm also going to do a class on butterflies over there. Not to mention, I was talking a little bit about intraday trading. If you do have the capacity to do that, our membership also includes the daily chat room over there, so you can hop in there live with us anytime. We talk about trading throughout the course of the trading session. If you don't have the time, I get it. All you want to do is go to TheoTrade, okay, .com/trade. You can also email us support@theotrade.com. Our phone number 800-256-8876. Again, this is a class that I'll be putting on this Saturday. It's a longer one, all right? It's 10 a.m. to 2 p.m. That's Eastern time. If you're out in the Pacific time zone, get up early. It's 7 a.m. It'll be over by 11:30 there. I'm going to take as many questions as I possibly can. Again, put a tremendous amount of work into this class. It's about selling out of the money credit spreads. Huge portion of the class is going to be about probability, specific to probability of touching. Sell the wrong options, and you're going to find out real quick you are not going to be a happy camper out there. Sell the right options, put yourself in the right stance for each unique trade. Again, thanks everybody here for joining us at TheoTrade. Join me on Saturday, theotrade.com/trade. Bye-bye.